In this video, I'm going to discuss a topic in income taxation entitled Introduction to Income Taxation. The concept of income. Under the concept of income, meron tayong dalawang questions na sasagutin. First question is, why is income subject to tax? And the second question is, what is income for taxation purposes? Let's first answer the question, why is income subject to tax? Bakit nga ba merong tax sa ating income? Okay? Ang income ay subject to tax because income is regarded as the best measure of taxpayers' ability to pay tax. Meaning to say, malalaman natin ang abilidad ng isang taxpayer na magbayad ng tax sa pamamagitan ng kanyang income. Remember, we have one theory of cost allocation na tinatawag na ability to pay theory. The ability to pay theory states that taxpayers should be required to contribute based on their relative capacity to sacrifice for the support of the government. Ang ibig sabihin nun, those who have more should be taxed more kahit na kokonte yung benefit na nare-receive nila from the government. Those who have less naman should contribute less even if they receive more benefits from the government. Let's proceed to the second question. What is income for taxation purposes? Ano nga ba yung income na kailangan for taxation purposes? Under the NIRC or the National Internal Revenue Code, the tax concept of income is the gross income. A taxable item of income is referred to as an item of gross income or inclusion in gross income. Meaning to say, pag yung item of income natin is taxable, ang tawag natin doon is item of gross income or inclusion in gross income. Paano naman pag yung item of income natin is not taxable, meaning to say hindi siya pinapatawan ng tax? Ang tawag doon is income exempt from tax or exempt from income tax or exclusions from gross income. Let's expound gross income and taxable income. Gross income refers to any inflow of wealth to the taxpayer from whatever source, legal or illegal, that increases net worth. Ang ibig sabihin nun, lahat ng income ng taxpayer, saan man siya galing, from legal man or illegal, na nakakapag-increase ng kanyang net worth ay tinatawag na gross income. Now, ano-ano yung mga kasama sa gross income? First is the income from employment, trade, business, or exercise of profession. Meaning to say, kung ikaw ay isang employee, yung salary mo is included sa gross income. Kung ikaw ay may business, yung income mo doon ay kasama sa gross income. Or if you are, for example, an accountant and you are exercising your profession, then kasama din yung income mo sa gross income. Aside from that, yung income mo sa mga properties mo and other sources, such as dealings in properties and other regular or casual transactions. How about taxable income? What is taxable income? Under the National Internal Revenue Code, taxable income refers to certain items of gross income, less deductions and personal exemptions allowable by law. Pag sinabing less, it means minus. So meaning to say, under the NIRC, gross income minus deductions and personal exemptions ay equal sa taxable income. So kung mapapansin nyo, gross income is broader. Pag sinabing gross kasi, it means wala pang deductions. Buo. Okay? However, under the train law, the Tax Reform for Acceleration and Inclusion Law, which became effective on January 1, 2018, napalitan na yung formula to get taxable income. Ang formula na ngayon is gross income less deductions ay equal na sa taxable income. Yung personal exemptions kasi ay tinanggal na sa train law. So meaning to say, ang susundin nyo na formula to get your taxable income ay gross income less deductions. Wala ng personal exemptions. Let's discuss the elements of gross income. We have three elements of gross income and they are as follows. First, it is a return on capital that increases net worth. Take note na ang ginamit ay return on capital at hindi return of capital. Mamaya, we will discuss the difference between return on capital and return of capital. And it is not sufficient that it is a return on capital. Dapat nakakapag-increase din siya ng net worth ng taxpayer. Second, it is a realized benefit. Pag sinabing realized, that means earned. Earned benefit siya. And number three, it is not exempted by law, contract, or treaty. Bakit hindi dapat siya exempted by law, contract, or treaty? Para mapatawan siya ng tax. Kasi pag sinabing exempted by law, contract, or treaty, that means hindi na siya taxable. Unahin nating i-discuss yung first element of gross income, which is return on capital. Pag sinabi nating capital, it means wealth. Any wealth or property of the taxpayer. Now, for you to understand this easily, we will have an illustration. HHWW purchased goods for 300 pesos and sold them for 500 pesos. Now, i-analyze natin kung ano ba yung laman ng 500 pesos na yan. Si HHWW, binenta niya yung goods na binili niya for 500 pesos. Meaning to say, ang selling price niya ay 500 pesos. Before siyang nagbenta, bumili muna siya ng goods worth 300 pesos. Yun yung nagastos niya for purchasing the goods at ang tawag doon ay cost. So the cost is 300 pesos. Now, we will get the difference between 500 and 300. 500 minus 300 ay 200. Yan yung magiging tubo niya. And the accounting term for that is markup, tubo. Okay, so the markup is 200 pesos. Ang tanong is, alin sa tatlo ang magiging return on capital natin? Yung 500 pesos na selling price, ang tawag dyan is not return on capital but rather total return. Kasi ito yung buong natanggap ng HHWW or ni HHWW sa pagbenta ng goods. Yung 300 naman na nagastos niya ay tinatawag na return of capital. And yung 200 na tubo niya, yan yung magiging return on capital. Bakit nga ba yung 200 pesos ang magiging return on capital natin? Kasi nga, pag sinabing return on capital, it increases the net worth of the taxpayer. Yung 200 pesos kasi ay tubo ni HHWW. At yung kanyang tubo na 200 pesos will increase his or her net worth. Yung 300 pesos naman na cost is a return of capital. Bakit siya return of capital? Kasi pag sinabing return of capital, it just maintains net worth. Meaning to say, hindi niya pinapataas yung net worth ng taxpayer. Remember na ang nagastos niya for purchasing the goods ay 300 pesos. At nung nagbenta siya ng goods na yon, nabawi niya lang yung nagastos niya na 300 pesos. So that means return of capital lang siya. Now, another difference of return on capital and return of capital is that yung return on capital is an income subject to income tax. Meaning to say, ang return on capital ay taxable. Meaning to say, dun sa ating illustration, yung 200 ay taxable. Papatawan siya ng tax. Yung return of capital naman is not taxable. Meaning to say, exempt siya. Hindi siya papatawan ng tax. So yung 300 na cost ni HHW, yung nagastos niya for purchasing those goods, ay hindi taxable. Exempt yung 300 pesos. So ang papatawan lang talaga dyan is yung tubo, which is 200, and the 200 pesos is a return on capital, which is subject to income tax. Capital items deemed with infinite value. There are capital items that have infinite value and are incapable of pecuniary valuation. Merong mga capital items na hindi nami-measure ng pera or cannot be measured financially. Examples ay yung value ng buhay natin, value ng health, and yung value ng human reputation. So walang katumbas na halaga yung value of life, value of health, and value of human reputation. Kaya anything received as compensation for their loss is deemed a return of capital. Sinabi niya, return of capital, that means exempt or not taxable. Pag sinabi natin compensation, it means kabayaran. So anything na marireceive mo as kabayaran for the loss of life, health, and human reputation is a return of capital exempted from income tax or not taxable. The value of life cannot be measured by money, This is applicable sa life insurance policy. Under Section 32 of the National Internal Revenue Code, the proceeds of life insurance policies paid to the heirs or beneficiaries upon death of the insured, whether in a single sum or otherwise, are exempt from income tax. For example, you are the owner of the life insurance. Ngayon, namatay ka. Yung proceeds of the life insurance policy ay mapupunta sa heirs or tagapagmana or yung mga beneficiaries mo. Now, yung proceeds na matatanggap ng mga beneficiaries or heirs, whether buo siya or hindi siya buo, ay exempt from income tax. The proceeds of a life insurance contract collected by an employer as a beneficiary from the life insurance of an officer or any person directly interested with his trade are likewise exempt. Meaning to say, kahit yung beneficiary mo ay yung employer mo, yung proceeds na matatanggap under a life insurance policy ay still exempt from income tax. Meaning to say, walang ipapataw na tax doon. So, as a general rule, the proceeds of life insurance contract or life insurance policy are exempt from income tax. Pero meron tayong exceptions to the rule. Meaning to say, yung mga ililista ko dito ay taxable return on capital. They are not exempt. First is any excess amount received over premiums paid by the insured upon surrender or maturity of the policy. This happens when the insured outlives the policy. For you to understand this easily, I will give you an example. Anthony is insured in a 1 million life insurance policy with annual premium payments of 20,000 pesos for 10 years. If Anthony outlives the policy, after the 10th year, he will be paid a 500,000 pesos maturity value. Ang ibig sabihin nito, kung buhay pa si Anthony after 10 years, meaning to say, makakatanggap siya ng 500,000 na maturity value. What if Anthony outlives the policy after the 10th year at na-collect niya yung maturity value of 500,000? Let's analyze. Total proceeds na matatanggap niya ay 500,000 pesos. Ito yung maturity value. Okay? Yung return of premium is 200,000 pesos. Paano na-compute yun? We have 20,000 pesos na annual premium payments. Imumultiply natin siya sa 10 years. So, 20,000 times 10 years ay 200,000. Now, meron tayong excess amount dito at ang tawag natin doon is return on capital. So, 500,000 minus 200,000 ay 300,000. This is the excess amount that I am talking. And this excess amount, which is 300,000, is taxable. Second, gain realized by the insured from the assignment or sale of his insurance policy. Pwede kasing ibenta yan or i-assign sa ibang tao yung insurance or life insurance policy. Ngayon, normally, you will sell or assign your life insurance policy at a gain. Siyempre, ibibenta mo yung life insurance policy mo ng mas mataas. So yung gain na ma-earn mo from the assignment or sale of your insurance policy ay merong income tax. It is taxable. Next is the interest income from the unpaid balance of the proceeds of the policy. Yung proceeds of life insurance policy, pwedeng matanggap yan ng buo o hindi buo. Ngayon, pag natanggap yan ng hindi buo, yung mga hindi pa nabayaran ay mag-earn ng interest. Ngayon, yung interest mo dun sa unpaid balance na yon ng proceeds of the policy is taxable. And number 4, any excess of the proceeds received over the acquisition costs and the premium payments by an assignee of a life insurance policy. Just like the value of life, the value of health cannot also be measured by money or cannot be measured financially. So any compensation received as consideration for the loss of health, such as compensation for personal injuries or tortuous acts, is a return of capital. It says the compensation is a return of capital, meaning to say the compensation for the loss of health is not taxable. Next is the human reputation. So just like life and health, the value of human reputation cannot also be measured financially. So any compensation for its impairment is a return of capital. It says return of capital, meaning to say it is not taxable. For example, yung moral damages na marireceive ng isang tao from oral defamation or slander, alienation of affection, and breach of promise to marry. Pag sinabi nating damages, ang ibig sabihin niyan, compensation. Pag damage, injury. That's why ang ginagamit ng mga attorney or ang legal term na appropriate for compensation ay damages and not damage. Kasi pag sinabi nating damage, it refers to injury. Pag sinabi nating damages, compensation.